Good morning, everybody. Good morning. It is Thursday, July 27. One more day left in the week, and we have pretty much made it through all of the major earnings. We've got McDonald's this morning, and that's it. Worst FOMC meeting in history. Worst. Absolutely the worst. We had a 34-point range. That's it. 34, almost 35 points. And we closed red. The streak is over. 3, boom, that's it. We closed red, down less than 1 point. Now, because we have made it up here and closed at that old resistance area that we discussed, we're going right back into what I had sent out to you on Monday to start the week off with a suspicious bullish week. And again, I will scroll through this and read through it as everybody else does. I believe it goes down to the comments section. Before we get to that, we're obviously a major gap that we've created here overnight because the S&P futures are up 27 points ahead of the ECB and the GDP numbers coming out. So suspiciously bullish for SPX 4600 this week. Dow was on a 10-day streak, blah, blah, blah. The rotation. A rotation from the NASDAQ, which was oversold, from the Dow, which was overbought. They've not rotated out of the Dow. Instead, we have seen a little bit more of a rush over into the Russell 2000 and a weak bounce, which we'll go over here real quick. This is your SPX for the week, needing to break down, for 5 days. Not filled this gap from the weekend and creating a much larger gap as we get ready to go into the open today, as we are up greater than 26 points. So we're going to be up here somewhere in the 45.90 range as of right now. The VIX completely crushed, demolished, absolutely demolished. We are down here on 3-year, 4-year lows as we're coming down here on this 1273. As we broke down below that 1339 prior, that was where we got our big jolt, which was that one run that we had to 17 back there in the beginning of the month that everybody recalls. Again, we are crushed over here on the VIX, well below 1339 right now, so prudent to be, very cautious. Over here on the QQQ, and I am not going to correct this bar. Again, here was our bounce. This was that area that we spoke of with the flip, looking for that bounce up to 381. Obviously, we have this gap up here above, which needs to be filled or should be filled, doesn't need to be filled, because we are not looking at this as being a bear top. We are looking at this as being a very strong rally, a dip that's there to be done. Dips here, gaps unfilled, as you see, plenty of them, and we're not even getting close to the lower level that we're expecting the QQQ to dip to. Anyway, we're at hit 381, 384, 385. That fills your gap. So obviously, like we pointed out, that's to your upside. And here is your DIA, your Dow Jones. Dow Jones closed green for the 13th day in a row. 13 days in a row, greater than 5% above the all-time, within 5% of the all-time highs. And this is where your rally started. Your rally started back here in July, right around 337, as we broke out of this channel. And the channel, a little bit easier to see once you start zooming out a little bit. Here's the channel, and again, it's just something from a rough drawing, nothing to be very specific about, but there again, this is your channel being that the Dow Jones is a very peaceful index. It's not one that is volatile like the NASDAQ, and for those that forgot, back in 2007, 2008, the Dow Jones did come back up where the NASDAQ did not. And so this is where we're at here on the Dow Jones. As you see, we've hit that 100 extension. We're right up here at this 35,640 almost perfectly. Zoom you out. And again, I'm not trying to be, how would you call it? We're right up there, right at this resistance area, coming back here to the September highs 2021. We're right on up there. So, it's gasping for air in my view. Enough on the Dow Jones. So back to it. And again, not much to add. We were looking for the QQQ to fill the gap up there at 384.28 above it, which, like I said, would send the SPX for 4605, and it would pretty much solidify that 4637, 4662 for Jay Powell. Jay Powell did not produce anything. We had, like I said, the worst FOMC meeting day ever, 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 ever. So, again, we've got plenty of accommodating space as we've now come to most of the big earnings. We are still due to get Apple. We are still due to get Amazon. Meta shared this weeks and weeks and weeks ago. It has finally filled that gap where it created the metaverse and lost tens of billions of dollars. But they come out and say some nice, cute little things, and that gap is filled because that gap was going to get filled. I absolutely hate this company in so many different ways you would never understand. And here you are. So, again, for those of you that don't know how to draw this stuff, here's your drawing, and here's where you're at. And this will be your new gap to be filled, 298.57, and wherever it is that we wind up opening today. So, zoom this out for a couple of years so that it's there, and here we go. So that is your Meta over here on Microsoft. Again, Microsoft big gap down over there from earnings. Not breaking down below that 330 area. That 330 would be fantastic, but for now, still floating around, pretty much doing its, gasping for air. Here's your Tesla. Again, big gap from earnings. Got the nice bounce that we expected. Got a nice dip that we were looking for. Now you're floating around over here on Tesla. Amazon, big drop down on that news from the FTC. You got earnings coming out next week, so leave that one alone. Nvidia still looking for that 440 to come down to. Now that you've got this Metaverse earnings and okay, here it is. All right, here it is. Where are you at? Come on, nope. Give me a second. Hold on. It's morning for me as well. Hang on. This is where you're at. Okay. This is your drop. Here's your dollar dropping off from right here. Okay, Tuesday afternoon. Here's your dollar dropping off. This is your move on the markets. Here's your 10-year. Here's your 10-year right now, falling off back down here as it was threatening to get up above 4%. Here's your 10-year falling off. This is your move in the markets. Wheat, crude, not making any major moves. Your major move is your dollar. Your dollar, your dollar, your dollar. And the dollar move as of where it is right here, this is exactly why you're getting the reaction in the stock market this morning and the reason why your futures are up. 183 points, plus 1% on the NASDAQ, 26%, almost 0.5% over on the S&P, 5 points over on the Russell 2000, and only 73 points over here on the YM. This is what it is. It's all about the dollar. You have the ECB interest rate coming out at 8:30 in the morning, and you have U.S. GDP coming out at 8:30 as well. U.S. GDP, like Jay Powell said yesterday, the CPI reports, they could be lying about it. The numbers might not be real. The market didn't give a shit. 7 times, 8 times, 9 times, he said, we will raise rates again if we need to. Market didn't give a shit. You're coming in to, again, what I think was and still think a suspiciously bullish week simply because there is some dollar number or some data numbers that can and should plausibly be filled. July, 197 points. We have today, tomorrow, and Monday for July. We have that gap up above at 4637, 4662. We have that Fibonacci at 4605. We are getting a 20 plus point gap up as of right now. Back in the day, they weren't that great, but here you go. 28 point gap up would close 4 points above the open. 26-point gap up, we closed 27 points above the open. That was on June 30th. Different kind of scenario, June 30th. 21-point gap up, we closed 21 points below the open. We closed green by 7 cents. That was May 30th. 20-point gap ups are not good. Here, 40-point gap up over on May 25. We closed down 5 points from the open. So there is going to be a risky, okay, understand, risky spread that will be out there. But again, when you have a 12, 13 VIX, you are not going to get paid for the risk that you are taking. You're not going to get the reward being 30, 40, 50 points away from the price action over on the SPX. If you're going to get paid, you are going to need to get down there into the trenches and be right where the money's at, and you're still not going to get what we used to get. You're not going to get a $4 credit. You're not going to get a $3.50 credit. You're going to get $2. You want to get paid, you're going to need to go back for the gap fill, which, again, bring it over here. I'm sorry, this went fucking a lot longer than I did. I gotta join the John Nigerian 60 seconds thing. You want to get paid on an SPX spread, you are going to need to get down here into the 45.65, 45.70 area and sell calls if you want to get paid. That's the only way you're going to get a credit, $3 or something like that, which is going to make, in my opinion, worthy of even getting involved into something. So we'll see what happens after GDP and the ECB meeting, and I'll see you guys in the chat room.